Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, I'll introduce Rob in just a few moments, but first we have to go over some important housekeeping details about the session. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, we are live streaming to multiple different platforms. So we're going to take questions at the very end after Rob goes through his presentation, goes through some case study considerations, and then we'll open it up to questions with the time remaining. So again, keeping in mind that we're going to be taking questions from all of the different platforms, the portion will be a bit limited. So if we don't get to your question, just know it has nothing to do with the validity of it. We just only have so much time. With that, take it as encouragement to attend the insiders meeting when there's a 45-minute portion solely based on answering questions for our subscribers. So obviously a much higher likelihood of you getting your question addressed there. So the chat window, I can handle any queries in there. So any support related queries, please feel encouraged to reach out to me in there. And also for any interaction amongst other attendees, certainly feel encouraged to use that window. For our Zoom audience, just make note that by default, it goes to hosts and panelists. So if you'd like everyone on the webinar to see your message, be sure to change it to everyone instead of the default of hosts and panelists. So all right, that covers off all the normal housekeeping details we have to go through. We have the PPI and the CPI report ahead, and the market's kind of been on pause for the reaction to that. And it looks like the Bank of England is going to stop intervention. So very interested to hear Rob's thoughts on that and the overall impact that will have moving forward. All right, so I will move out of the way and introduce who we're all here for. Glad to see everyone on for this live webinar tonight, and thank you for joining us. At this moment in time, I'll introduce the man of the hour. That's Rob Roy.
All right, buddy, welcome to TradeFinder Live. Thanks, Zach. Appreciate the intro, and yeah, we'll talk about those subjects that you brought up because they were quite interesting as far as the market is concerned. Fair warning, my third time speaking today, so we'll see how the breath and the voice go. I'm going to give it my best shot. But some things that we definitely need to talk about. I do apologize for last week. Just finding out that broken ribs is a much bigger deal than I ever thought it was. So anyone that's ever gone through it, I feel for you, because I had no idea what I was in for. So I do apologize for last week. Thanks for joining us this week. All the different live media streaming services. By the way, we're doing the new shorts. So if you're on TikTok or LinkedIn, we only need a few more people. We can start streaming on LinkedIn. So if you're on any of those platforms, please go ahead and follow us. We'd really appreciate it. So again, thanks to everybody for all the other streaming services that we're on. I lose track of them all. I'm not the most social media conscious person out there, I suppose, in this new world, but I do know the markets. And so let's take a look at the markets right now. So if you're new to TradeFinder, this is how it works. Zach gave you a brief rundown, but we'll talk about the markets. We'll talk about the international markets. We'll review case study trade alerts that we may have closed for our alert subscribers, give you an idea how that works. And we'll look for case study considerations for this week. There's only a couple to review from previous weeks, and they're mostly going to go away. So I don't know what we're going to talk about as far as that's next week, unless we find a good one to talk about this week. And then with whatever time's left over, and hopefully there'll be a bit of time left over, we'll open that up to the live Q&A that Zach just went through. So just wanting to make sure that everybody is seeing the correct screen. All right, so as Zach said, it was a pretty quiet day in the market. It's a little bit of a bounce higher, not much. We were slightly oversold after yesterday's move. And then the Bank of England came out and said they're going to stop their intervention soon. And so with that, the market just went straight down. If you look at an intraday chart, it was pretty amazing to see a little bit of a bounce back towards the close, but that caused us to finish on a down day here, and I'll talk about a couple of things there. But first thing you want to notice is that gravestone doji. For those of you that are candlestick charting people out there, that normally is a bearish sign. So as Zach said, we have the PPI report tomorrow and then the CPI Thursday. Often those are reversed, with the CPI coming out first. But this week, the PPI, which is the producer price index, that's prices at the wholesale level. And then on Thursday is the big one, the CPI. And who knows what's going to happen with that. I do think that's going to be, I don't know that the PPI will move the market so much tomorrow. So we may have a quiet day tomorrow unless something unexpected comes out again. But I think Thursday is going to be a volatile day. And so we'll see how it happens. But in the end, we still had average volume today, which I thought was interesting. Yesterday was Columbus Day, so the bond market was closed. And boy, you could see major intraday volatility. It was nuts. Not a whole lot happened at the end of the day. You look, it's not that big of a bar, but the intraday volatility was all over the place. Thinly traded markets, no direction from the bond market. Just a really wild day to finish kind of just a little bit to the downside. The key things, note the wave 3 is moved. That's because we took out that September 30th low, and then we made a new low. We did not make a new closing low, so we didn't take out the close of September 30th, but it certainly looks like that wave 3 wants to continue now and move on down. It would take something extraordinary out of the two inflation reports in order to create some sort of a bounce up to a wave 4 now, I think. So it seems like that wave 3 is going to extend down. Normally when you have this set up, it'll come down somewhere in the area of this wave 5 target, which then means at some point we'll have a wave 4. Don't know when that'll be. That's always the tricky part, is when there's a wave 3 in. You can see there's a zigzag right there. So let's go ahead and take a look at that real quick, coming from this C wave. So we have a complex C wave here in the big zigzag. So that's a 38.2% B wave correction there, which leads you to the 61.8% extension. So that's 345. So now we have 3 different things getting us into that 340 area, the big zigzag, now the complex C, and the wave 5, all or the forecasted 5, all giving us that same price level. So I think 345 is in the cards here in the not too distant future. That seems destined to occur. And then do we go further than that? Do we bounce from there? It's going to be interesting. Now there's all kind of conspiracy theories. We'll look at interest rates here in just a second. But I just wanted to highlight the fact that we didn't close below the September 30th yet. But let's go ahead and take a look at interest rates. And the bond market, I've talked about this numerous times. it's good to have at least a working understanding of the bond market. You don't have to be a bond trading expert to be a good equities trader, but they're so correlated, and there's so much money in the bond market. Literally, the bond market dwarfs the equities market. It's that big. A lot of smart people in the bond market. And now you're starting to get the conspiracy theories. So is this marketing stuff? Is it fear mongering? But there's talks that there's some big things going on that could create problems. Was that part of the Credit Suisse news that came out last weekend? We'll see. If we start to see more financial news, the financial system is in a much better shape than it was back in 2008. But man, we're starting to get an awful lot of comparisons. And when you look at the yield curve, we might as well just go ahead and bring that back up. You just see that, and I've talked about this before, the unbelievable inversion that we have here that just simply continues, and if anything is worsening. See, here's the 2-year here, right there. There's a 10-year right there. It's not supposed to be that way. You're not supposed to get more money for holding something 2 years than you do for holding it 10 years. So just from a common sense standpoint, when you see that, something is out of kilter. And so is the bond market in trouble for some sort of crash? Because remember, bonds are inverse. So as rates are going up, that means prices are going down. So, when you've got some people with significant, maybe leveraged bond holdings, et cetera, not good for them. So I don't want to talk any more about that other than I just address it because I imagine that you're seeing some of the headlines because there's so many of them out there now. They kind of came out of nowhere and now they're everywhere, talking about bond market crashes and all kinds of stuff. Like I said, it could just be fear mongering, but there is no doubt that there's been a pretty good move to the upside in rates, and it continues to march on. And then if we look at the 10-day moving average here to see, are rates really that far from the 10-day moving average? A little bit, not that significantly. And then we have the wave 5 up here. I just don't think that a move up to the wave 5, I don't think this is enough to create that kind of an issue in the bond market. But if we power through that 5, we can start to get to the point where we have to start thinking about what about people that are on the wrong side of this trade? Where are they? So, we'll keep that on the back burner and talk about it more as we move forward. So rates up today, dollar up today. And then as Zach mentioned in the intro, the Bank of England saying that they're going to stop their intervention, and the market didn't like that at all. And just straight down until we had that little bounce at the close. So lots of trouble signs out there. The most positive thing that you can say for the markets now, nothing from a fundamental standpoint. The main positive you would have if you're looking for some sort of a bounce or rally out of the equities market is simply things are getting awfully bearish. A lot of people on the bearish side of the trade, a lot of people starting to pile on to negativity. And you know how it works. When everybody gets one way, it doesn't matter what the fundamentals are anymore. When everyone's on one side of the trade, the market's going to go the other way because it's the path of least resistance. So I thought I would go ahead and bring the VIX up now so we can take a quick look at the VIX. And we're kind of maintaining that level above 30 here. We tested it in the beginning of October. Now we're back up a little bit of a doji here. So something may happen with the VIX tomorrow. Is that a spike or a big move back to the downside? I just got done saying that I didn't really think the PPI would be much of a market mover. I think they'll all wait for the CPI on Thursday, but looking at that doji on the VIX, I might be wrong. Maybe tomorrow creates some sort of a move. But you can see here we are. We're right back up into this upper level here, up at the 35 range again. So are we going to power through there? We'll just have to wait and see. But really interesting times in the market. And if you're looking for volatility, this is what you're looking for. So just everything going back to the upside as far as rates in the dollar. And as I mentioned, just one last comment on the dollar for those of you that may not have been viewing some of our videos in the past. Why is the dollar moving up a concern? Because the dollar is so strong now that as it continues to move up, it tells you international money is coming into the dollar. It's the only thing that could be pushing it up with this kind of angle to the upside. And that means global weakness. When money from around the world comes into the dollar, it's looking to hide, and the dollar being viewed as the currency of choice in rough times. And so that's what propels the dollar higher, and it's bad for international companies, anything with international exposure, with the exchange rates, et cetera. All the things that we've talked about, they continue. So things aren't changing. All the stuff is still exactly the same as what we've been talking about. So until we get so bearish and so far on this side of the trade, I just don't see the catalyst for the market to move higher. So when will the market move to the upside? We're always talking about, the wave 3 down, the wave 5 down, all these things. When do we get to the point where the market rallies? And I've talked about this a little bit, but I just want to stress it. My opinion, when we get to the point where the Fed pivots, when the Fed goes from, and I'm a firm believer, they're going to be raising rates one meeting, cutting rates the next. I was reading some stuff just before we started TradeFinder tonight, where some people think that the Fed's going to pivot sooner rather than later. I think that's wishful thinking, because basically we're now priced in 150 more basis points of increases. We talked about that in one of our shorts, going from 125 to 150. That's not getting close to pivoting. That's making things worse because further rate hikes coming. And then Jamie Dimon, we talked about this in yesterday's short. Jamie Dimon saying, hey, this is going to be serious. This recession stuff is going to be serious. So don't take it too lightly. And Jamie Dimon is one of the few people that when they speak, I listen and see what they have to say. Got a lot of respect for his knowledge and experience in the markets. And so when he comes out and says something that's that strong, I think it's worth paying attention to. Will he be right? We'll wait and see. But, the bond market agrees with him. The yield curve agrees with him. And so I don't know how you could argue the point, but there's no guarantee he's going to be right. We'll see how it plays out. But, man, lots going on right now in the markets. And as I said, not much of it on the good side. So if we take a look at some of the other markets, looking at the Dow, and best thing about the Dow is that we haven't taken out that September 30th low yet on the diamonds. Still have that wave 3 down. Remember when we talked about we talked about this in Thursday night's insiders meeting. Sorry about that. That was the insiders meeting, not TradeFinder. We didn't do TradeFinder last week, but in our insiders meeting, this was last Thursday where we were right here and said, you don't want to see a gap down on Friday. We don't want to see that gap down because that creates an island reversal. And an island reversal is that we had a gap up and then a gap down. So these 3 bars here are just kind of floating on their own, gaps on either side. So that's known as an island reversal. And usually when you have that, the market continues in that direction for a bit of time. In other words, that we're likely to continue lower. We still haven't taken out 290 yet. So the diamonds have got to break 290. But if they do, then I think we're going down to that 278, 280 level, and maybe fairly quickly. So just watch 290 on the diamonds. It's as simple as that. And we look at the 10 moving average on the diamonds, not oversold at all. So trouble there. And then let's look at the Qs. And look at that. Just that's the worst looking. Man, we've talked about this for months, right? That the Qs are going to underperform in an era of raising rates. It's just technology underperforms. It's just the given. This is how it works. We are a little bit oversold here, though, on the Qs. You can see on the down close today, a little bit of separation from the 10-day moving average. So getting down a little bit. So from that, touch oversold maybe, but broken the September lows or the September 30th lows significantly, closed below it a couple days. And the march down to 250 looks well underway on the Qs. So yeah, not looking too good on the Qs. And then the IWM, by the way, the insiders meetings, we do that every Thursday night for our alert subscribers. And we have an extended Q&A during that. We do one on TradeFinder, but we do 45 full minutes of Q&A on Thursday night for our alert subscribers at ewotrader.com. So taking a look at the IWM, the key here, you could probably recite it without me even saying anything. If you've been watching, the 170 level is key. We've broken back below it. We got above it. Not kind of the island reversal thing, but there was the gravestone doji. We talked about that. That's where we were on last Thursday night as well. And then Fridays, we did gap down on the diamonds. And then we had the move down gap down on the IWM as well. So below 170, we haven't taken out these September lows yet. Can we get back above 170? If you're interested in being long the IWM or looking for what the catalyst will be, it's got to get back above 170. That's your key level. And if it doesn't, then at some point in time, the longer we stay underneath a level like this, I always use the analogy of like your fingernails holding on to the edge of a cliff. How long can you hold? And the longer you stay there, the more apt it is you're about to fall. And that's how markets work as well. So the longer we're underneath there without bouncing back, the greater chance of falling. The other side of the coin is sometimes you consolidate underneath a resistance level, and then you build enough momentum and energy, and then you can bounce above it. That's what needs to happen if you wanted to go long the IWM. But again, the longer we stay underneath here, the greater chance that that doesn't occur. But we're not there yet. It's just a few days, so that's nothing to get too upset with. Bitcoin, I mean, I don't know how much longer we can talk about what's going on with the 20,000 level, but looks like we're going to go down and test 18 again. So it's that 1820 thing on Bitcoin. And every time we get down there, we bounce back up to 20,000. Are we going to do it again? We're about to find out over the next couple of trading days. So just this 18 to 20 range is where we keep going back and forth. We'll watch and see if we break below 18, then everybody, actually, when I say this old country expression, but Katie bar the door. If we can't hold 18,000, then 16, 12,000, you hear numbers like that. I think 16,000 is the next spot, and then see if we can try to hold there. But 12,000 could be realistic if we break below 18, which has not happened yet. And so just talking about what could happen, clearly we could bounce back up to 20,000 from here, as we've done numerous times. So all the way back to June, July, September, a few times in September. So here we are back there again. Will it hold again this time? That'll be the key. See how that plays out. So let's look at some of the international markets. Looking at the EWA for Australia, and yikes. There's not much too positive to say here on the EWA. We're below 20, and that means we're in danger of breaking this 61.8% wave 5 extension. You know what that means if you're a Fibonacci person. That means we're going to probably go down to 100% extension on that wave 5. So it's imperative if you're long the EWA, you want the Aussie market to go back to the upside, that we hold right here. We can't go any lower than this. We break that low, and I think it opens the door for that extension all the way down to 100% on the 5 wave, which is quite a bit lower than where we are. You can see it's hard to be super positive right now, other than it's really negative, if that makes sense. So there we go again, and another zigzag pattern here on the EWC. So complex C wave here as well. And when we take a look at that, we're not even at the 61.8% level. The 100% is all the way down at 28. So yikes, the potential of moving down to the 28 level on the EWC is there. You can see we're already at 135% 5 wave extension. Could see that out of the EWA as well, but it doesn't look like we're done, and a little bit oversold. So that's the most positive you can say here, is we're a little oversold from the 10-day moving average. But other than that, it's yikes. India, the INDA, 41 didn't hold. We talked about how we needed to get back above 41. We didn't. And so there you sit. And we're probably coming down to 39. I mean, that's the realism of the INDA. Unless we can get back above 41 quickly, and today was not what you're looking for. There's another gravestone doji, which means probably new lows to come. I think 39 happens probably within the next few trading days, and then we'll see, can we hold that level down there at 39? So it looks like this 4 here is going to get disqualified. This entire 5 wave pattern will be disqualified if we break below that level, because it's barely a qualified for now. So it's all. So let's look at the EWU, see what the UK looks like with that announcement out of the Bank of England. And as you would expect, kind of an ugly day. And sitting here at 26 on the EWU, and not quite at the September lows yet. That's a positive. Big wave 3 to the downside. Look how big that wave 3 is, just zigzagging all the way down. And we could spend the rest of the hour just mapping out those zigzag patterns. But that's why we talk about them so often. They're everywhere, and you pay attention to them. And they're great for trading. I love trading zigzags in a wave 3. It's ideal. So we'll see how that plays out. I thought I would show, I'm sure this is going to come up, so I'll just head it off. The GLD, and didn't get above 160. We talked about if we could get above 160, then we could catch a bid and get up to 168. Hadn't happened. So here we are back down at 155 again. We broke below it and hit that 5-wave box, the tap box, and then bounce back to the upside. But now it looks like we're going to come test it again. However, there is some support at 155, so there's a chance to hold there. We'll see how that plays out. And then oil, that one might come up. Now we had this big move to the upside in oil, and if we walk back, to me, it was just a bit too much. That was a little too vertical for me at 75. I talked about this to our alert subscribers Thursday night and said that we would likely go to the downside, just looking to move back to the 10-day moving average because we were so overbought here on oil. And so we did a speculative position on the downside of oil in one of our portfolios, looking for it to move back to the downside. So puts, and then boom, right back down we went. And so it took those off today because the goal was to go to the 10-day moving average, and that's where we went. So when you set up a plan for a trade and it hits it, you take it off. So the question is, will we break below 70? Are we going to go below there? Well, we'll see how that plays out down there. You know, OPEC is going to do everything they can. They've been jawboning. That's what gave the bid to oil in the first place. It just got too vertical, and it was nothing more than getting rid of the vertical move to get back down. And so that's why we did the puts. Target hit. Now we'll monitor. We'll watch and see what 70 does, and we'll see where we think oil goes from there. So if somebody is asking me, where do you think oil goes from here? I'm just going to have to say, I don't know. We're at a support level or awfully close to it there at 70. You can see it's held since July. 70 has been support. Does it bounce again? Maybe. We probably would have run up to 80 to the previous 4 if it hadn't gotten so vertical. But this is why I don't like it when things go vertical. When things go straight up, they come straight back down. And that was our plan. That's what it did. Now we'll wait and see. So I don't have an opinion on where oil goes from here, other than let's monitor 70. If it breaks below that, then I can tell you we're probably coming down here to test this wave 5 low. If it holds again, now it's got to get back above 75. So a bounce off 70 doesn't interest me anymore. Need to see it clear 75 with a follow through day. And then we can talk about moving back to 80. How much more can OPEC say? They've come out a couple of times talking about production cuts, etc., trying to keep the bid underneath oil. But one of the things that I posted in the weekend, and if you're on YouTube, go to our YouTube channel if you haven't. Elliott Wave Options on YouTube. We do a weekend video every weekend talking about the markets and conversing with you guys and stuff. And in talking about going back and forth on where oil could go, we know we have the OPEC argument that they want to cut production, so decreasing supply should increase demand, right? So that should drive the price up. But the other side of the coin that I proposed is, if we go into this recession that Jamie Dimon is warning could be serious, what happens to demand? You know, they're on the supply side, but what happens if demand goes away? They can cut production all they want. If there's no demand, there's going to be more supply, unless they turn the nozzles off altogether. And I don't think they're going to do that. I don't even put anything past them, I guess, but I doubt that would happen. But I can tell you if we break 70, OPEC is not going to be happy about that. On the USO, they want to keep the price higher. And if you're wondering, I mean, the end game is in sight of the supply of oil. It's not infinite. So there's not an infinite supply of oil, and I think they're wanting to keep the price up and make as much money as they can while they can. That's simply my opinion. That's an editorial opinion, nothing more than that. All right, so that's the markets, gold and oil. And then I did want to share with you, we're at a point right now in our AI portfolio. That's our time strategy portfolio that we don't have any new alerts on right now due to the fact that the VIX is so high. The AI takes that into account because these are calendar spreads, butterflies, diagonals, things like that that are designed for a stock to stay in a trading range. And when you have a VIX at 35, that factors into whether or not the stock can stay in its trading range. So I thought I would just show you, this is the page. I haven't done anything to it, just brought it up. This is our time strategy. Look at these results over there. All these wins, there's one loss there on the pharmaceutical RETA, and all the rest are winners. That's the most recent stuff. That's the front page, and every time there's a new one, it goes on top. All those winners, one loser. What a great strategy, having an AI infused into your technical analysis. I think we're one of the leaders doing that. Everybody's talking about AI and the future of AI with technical. It's here for us. We're doing it now. It's involved in this strategy, and it's been working phenomenally well. So there wasn't anything new to show you, but there was a lot of stuff that's been closed lately. And look at that. It's just, the record speaks for itself, as the cliche goes. So taking a look at some of our past, as I've said, there's not many of them. AbbVie, would have talked about this last week. We did have alert on this for our alert subscribers, and we did close it out. And let me show you that. Let's just go back here, and you can just walk through and you can see. So search symbol, going to get off of the time strategy, search symbol, ABBV, and you'll be able to see that we close it out. So look at that. There was the move to the upside that we closed out. We generated a 41% gain on it. So there's proof we did close it out. So I'm not just jawboning. We closed it out on this day. We had this big down day, and it was simply one of the analysts came out and reiterated that it's underperformed. So they reiterated, they didn't make a new rating. They reiterated an underperform for AbbVie, and that was enough to send it down 8.5 points, which was enough to send us to a 41% gain. So we took it and we closed it out that day. Now look what's happened since then. That's the value of having the alert service. If you were still holding this position or watching it, you're like, geez, I thought there might be some follow through here. But it came right down to this wave 3 low that could act as support. That was the thought process. It turned out to be an accurate one. Not always right, but was right on this one. And so bounced back to the upside, and we're out. So ABBV is gone, and we would have, if I would have been here last week, we would have talked about that being closed off last week. And then on the 20th, we did this strangle on ATHM. And so here was our big descending triangle. This is the beauty of having these strangles when you have volatility in the market, because boom, there you go. All right, all we're looking for is a 10% breakout. It broke out, came back up, and now we took out the previous one. So if you didn't get before, you should definitely be out now. So we're crossing that one off the list. And then on the 27th, we talked about how Northrop Grumman, now we did talk about how it's defense. It's not only a defense contractor, being a defense contractor puts it in a defensive category. So it's where money goes when things start getting really squirrely. And we looked at it and said, well, if we can stay in this trading range, perhaps staying between 440 and 500, you could look at putting some sort of a sideways position on. Well, let's go a day at a time here. And you can see that, all right, still okay, still good. 3, 4 days, 5 days, 6 days, everything's working well. And then look what happens. Now we've broken outside the wings. So we broke above 500 and we're sitting at 507, not too far outside the wings if you did do a 440, 500 butterfly. But now we want to look at is what is the likelihood you come back in to the wings? Is that okay? You certainly get nervous when you break outside the wings of a trading range. That's why I don't like these sideways things. Our AI, I would never do this without our AI infused time strategy. This is exactly why I don't do it. But with the AI telling you it's going to stay sideways, you can see the results on how well that works. Smarter than me. So taking a look at whether or not we may come back down, we are overbought right now. So I think there's a chance. So I would say let's give it a day or two. We're pretty far above that 10-day moving average. So there's a chance we come back down below 500. However, if we do that, I think we need to take this one off regardless. If we break back below 500 and get within the wings, great. That would be ideal. Come back to the 10-day moving average. I think that likely happens. We're a bit overbought for a stock like Northrop Grumman that is not the most volatile stock. You can see there's some intraday volatility, but in general, it doesn't do a whole lot, right? It stays in a range. So this vertical move is unusual. So I think that vertical move gets corrected. We come back to the 10-day moving average. You get within the wings and you get your premium back or a good part of it, and then probably take that off because this wave 4 at 61%, that's a really strong fib level. And if things are going to get even worse in the market, I think this is where money goes to hide. I think the bid comes here. So all we're looking is let's correct this overbought condition, get back to the 10-day moving average, get out of the sideways trade, and then move on. And so I think that's the game plan there. The likelihood of coming back and staying below here, I think, is less likely than it was when we talked 2 weeks ago. So we had a week where everything went great, but then these last couple of days breaking out of those wings, again, let the overbought condition rectify itself, use that as an opportunity to get out, and we'll look for something else this week and see if we can find something that works a little bit more in line with what's going on in the markets. All right, so let's see. There's one stock on the impulse search. That's mind-boggling. FTI Consulting. Geez, that doesn't look bad. I think this is defense too, isn't it? Military of some kind. I could be totally wrong on that. I'm not sure. But great looking chart. Good volume today. Look at that. Nice volume. We're a little overbought though on that volume move today. Oscillator looks strong. It is in a 5-wave to the downside, but looks like that's probably going to get disqualified. So I think we're heading up to 190 up here to look at this, especially when you take a look at that DMI. That's about as good as it looks for a continued move. It's telling you that what the DMI is telling you right here is there's a lot of strength to this. And for those of you that are not maybe with us just for the first time or first few times, whatever, on our website, we have an entire webinar on every single one of our technical indicators that we look at. In other words, there's an entire session on the DMI, how it works. We want all of our alert subscribers, when we're talking about our confirming indicators to Elliott Wave, how they work, what do they mean? Just don't listen to me talk about it. I want our subscribers to understand it. And so when you see that with the ADX moving up between the two directional indicators, good separation between the directional indicators, is below 40. Real quickly, all that is really good. It's telling you there's strength to that move. So when there's strength to a move, it means there's likelihood it's going to continue. And so we've built a good base right here at this 160 level. We've broken off of it. Tiny bit overbought. I don't know it's so overbought that you risk waiting. Like oftentimes, if we're overbought, I say let's give it a day or two to come back to the 10-day moving average and then come in. It could get more overbought than this, but I think we're trading 178. I think 190 happens. So that's going to be our case study because we're not going to find anything that looks better than that. I wouldn't think with everything that's going on. So 1011. I'm going to make a note on our NOC. Right back to the 10-day moving average. and exit. So that's the plan there. And then so here for FCN up to 190. It's not a huge move. We're usually looking for 10%. That's more like 5, but yeah, let's look for that, and that'll be the game plan for this week. And I thought I might finish a little bit early because we don't have that many past case study considerations to look at. That usually takes time, but we've closed them all out. And so we've been on a pretty nice run for our alert subscribers, and we've been on a really good run. We've been on a pretty consistent run with TradeFinder with our case study considerations as well. So with that, Zach, open it up for a couple extra minutes of Q&A tonight than what we normally have.
Awesome. Sounds great. I'm
Usually
sure all
takes
of
a little
our
longer to find a case study consideration than that too. That was pretty quick there as well. So everything moved a little faster tonight.
yeah, absolutely. And I'm sure none of our viewers out there are complaining with the extra time for the Q&A. Did just come to mind, we had an email come in, and you're showing the success, the impressive results of the time strategy portfolio we have. Just wanted to ask, would you say it's a good time to subscribe now for that portfolio, or to wait for some more new alerts to come out?
Oh, that's a really good question. I'm glad somebody asked, because that would be a question, right? If there's not any new alerts, we're about to enter earnings season, which you don't have to have an earnings season in order for the strategy. Just stocks drop all the time for reasons above and beyond just earnings. But the VIX is so high, earnings season's coming up. I think it's going to be a lousy earnings report season because we're going to start to see the effects of the market, interest rate hikes starting. I think we're going to be inundated with alerts here within the next couple of weeks. So I think it's a great time to subscribe now and get in front of that. You don't want to wait till they start coming in and then miss a bunch of them. So on the cusp of earnings season, well, which I don't think is going to be a good one, we've got heightened volatility. It's not going to stay there. It'll start to come back down. I think it's a great time now because I do think we're going to have a ton of new ones in the very near future. So sometimes having a little pause like this, and it just happened that we closed off like 3 of them last week. So that's the reason that there's not any right now. But yeah, no, I think it's a great time. I wouldn't wait. Yeah, no, that's a really good question.
Absolutely. Yeah, thanks for that feedback there. So we'll start out with first question here from XX. Rob, can you look at IRDM?
Is that IR David M? IRD as in David?
Correct.
Oh, Iridium. Man, I haven't heard that name in a while. This should be interesting. Well, it went kind of sideways, and it was kind of a mover. And like you can see up and down. I mean, in general, it stay in a massive trading range, but it would move a lot. So the fact that we've been going sideways for a while, I think that we may be looking at consolidation on top of, say, this trading range here. You like it when you break above it and then consolidate and hold above when you break out of a trading range. And so in this case, break into the upside, hold on top of that resistance level. I think that's a good one. I think there's a pretty good, the only thing that worries me is this doggone gap, how I feel about gaps. I wish it hadn't gapped up above, but the fact that it gapped above resistance and still has held so far is really a positive sign. So if it does break below this 47 level, just watch it. The 10-day moving average is right there. I think it would be short-lived, like even an intraday move, if it came down and it closed this gap and then reversed. So don't let that shake you out, I guess is what I'm trying to say. We would have to break below 47 and then follow through back down. And then we're probably testing 44 again. But I don't really see that happening. I think this one's pretty good up to that 5 target at 51. Like that one. A good spot.
Yes, indeed. I agree. So we'll ask a question here from one of our Zoom viewers, subscribers. Sanford would like to look at NCR, National Cash Register.
Gosh, I haven't heard about this stock in quite some time. So it didn't show up. This is the kind of thing we would look for in our time strategy. It didn't like this one for some reason, and you can see why. It continued lower. This whole AI stuff, and so it continues. It just continues to evolve, right? That's what AI does. It never stops, and so it's just constantly. We already have 20 plus years of history and data, but it just continues to improve on itself. For whatever reason, it didn't like this one because it never showed up, and it didn't stay in a trading range after the drop down. So, man, it just, when you see stuff like this, it just puts more and more faith in the AI system. But this big gap down here, and I talk about gaps getting filled. One day that will be, but that ain't going to be one day soon. That's a pretty strong wave 3 to the downside. Let's look at the CCI. Goodness. The reason I say that is here's the extreme point lows way down here, and we're nowhere near that. So there's more room to go to the downside. I don't know what the news was. I guess this was earnings. Was that an earnings report that it dropped on? No, it wasn't. It was between. It's a good example of you don't have to be on an earnings report in order to have a stock drop, but it doesn't look like it's done yet. Now there is a doji today, so perhaps we bounce back up to 20. If you got to bounce up to 20, back up to the 10-day moving average from that doji, that could be a good time to enter to the downside. It just doesn't look like the downside is quite over yet on this one. If you were looking at this for a bounce back, I don't think that happens yet. Now, if it gets above 20 with a follow through day, I'd change my mind. But unless that happens, I think there's a chance perhaps we come test 20, touch the 10-day moving average, and then roll back over again. Interesting one there.
Agreed. Yeah, that's one that we haven't analyzed in a while. So that was interesting to hear and see. So we've got a bunch of chatter requests from Zoom and the other platforms on good old Tesla.
Oh, I almost put that one on. I was thinking about that when I was talking about it, because last Tuesday I was going to talk about, Elon's back with Twitter. It's a soap opera, isn't it? Okay, we're going to do the Twitter deal. We're going to close it on the original date. No, we want to draw it. I mean, it's just a soap opera. But we talked about this. If it was 2 weeks ago that we talked about it in TradeFinder, or was that, am I confusing that with the insiders? But we talked about how if we didn't hold this 240 level, that was key, because that's where we had the breakout from the triangle, was right there. And when you have breakouts of triangles, they get retraced. That's part of Elliott corrective triangle rules, that at some point in time, it's like filling a gap. You don't know exactly when, but eventually the breakout will get retraced. So that's what 240, and it needed to hold there. And if it didn't, we're going to come down here to these lows. And that's exactly where we are now. So we're testing these lows. This is really important for Tesla, in my opinion. Now we're pretty significantly oversold now from where we closed today, from the 10-day moving average. So I think we probably try to bounce here, at least back up to somewhere near the 10-day moving average. Maybe we only bounce up a little bit. Maybe we just consolidate and let the 10-day moving average come down. But 220 really needs to hold here. If it doesn't, then you're starting to look at 180. And if, holy cow, if 180 didn't hold, then it's watch out below. 140 is next. So that's the thing here. We're oversold right now. We bounce back up, but it's got to get above 240 before the bounce means anything. Otherwise, it's just closing an oversold gap. If it can get back above 240, then we can talk about finding its footing and a potential to move higher. But right now, it's, man, we need to hang on to where we are right here, because if we don't, then we're at 180 on Tesla. So watch this level right where we are here. If it breaks these lows, so what's the low there? 206, 213. Well, the low's 208. So 206, 208, somewhere in that area. We need to hold this 208 level right here. If it breaks that, then 180 is next, and maybe very quickly. So it's white knuckle time if you're long Tesla. And the best thing that you could look for right now is just that bounce back up, possibly as high as 240. Maybe it could get back that high and test that area on the 10-day moving average, but it's looking bleak unless we can get above 240 with a follow through day. There is that gap sitting here, and sometime that'll get filled, but it could be a while. But man, it's danger, Will Robinson time for right now. But the most positive thing is it's pretty oversold. So even if it were to break down to 280 or break down to 200, right now I don't think it holds. It's too oversold. It's the same thing when you break above resistance. If you break above resistance and you're way overbought, it doesn't hold, it falls back down. It's the same scenario here to the downside. We'd be too oversold to hold a break much lower now. So from that standpoint, I think you're okay for the near term, but gosh, watch out.
Yes, indeed. Always a fun one to look at there. See, we do have a voice question here from Nicholas. Nick, we always love to hear from you, but we just don't have enough time for voice questions in this session. So definitely feel encouraged to raise that hand again for insiders, and we'd love to hear from you. We'll go back to a question here that we talked about a bit earlier from, oh, no worries, Nicholas. And a question here from Will saying, is the employment report more important now than the CPI?
Well, it sent us down a leg, didn't it? And it also created the extra 25 basis points. And that was what the problem was. The employment picture wasn't that bad. In fact, it was pretty good. And there was 5% wage inflation, 5% increase in wages. And that's, oh man. Sorry. Pardon me just for a second. Fighting off a sneeze.
I hope you don't have a sneeze. Yeah, I'm trying to talk you out of it. Try to distract you from it.
Whoa. Okay. So it wasn't as bad as expected, 5% wage inflation. And that just immediately, the Fed fund futures went from pricing in another 125 basis points of rate hikes to another 150. And the market didn't like that at all on Friday. So is it more important? I don't know that the unemployment report can be more important than the CPI, but the market certainly didn't like that. I think it's factored in. The Federal Reserve wants to, bring down some of the inflationary pressures because it adds to the overall inflationary environment. So the Federal Reserve is worried about it. It just sounds awful, doesn't it? That you have a central bank that actually wants to create more unemployment just to bring down wage pressure. It's just a sad state that we're in. But that's the fact. That's the truth of where we are. But to answer your question, back to your question, I don't think it's more important than the CPI, but showing that was certainly a report of importance, and the Federal Reserve will pay attention to it. And it created another 25 basis points in the Fed fund futures for future rate hikes. So it was important, but I don't know that it overtakes the CPI.
Very well. Thanks for that, Rob. And while we're reviewing or referring back to a bit earlier in the session, we got a question here from John on Zoom. Do you see oil technicals peaking or more run die to OPEC and SPR removal coming?
I don't think the removal of the SPR or keeping it going. I think if oil could stabilize, then I don't think that the strategic reserves are going to be utilized anymore. But I feel like, and I could be completely wrong, because I'm certainly not an expert oil trader, but you have to factor in demand, and oil prices, they've come down, but they're still elevated. It still hurts when you go to the gas pump compared to where we were, a year, 2 years ago. And if that demand comes down with a significant recession, I think it does the work for them. And I just don't think OPEC has the control they think they do to drive prices that much higher. I know there's a lot of people out there talking about oil spiking back to the upside. because of all that rhetoric. But I think people are missing the impact of it's always supply demand, right? That's what matters. So we're so focused on the supply side. I'm just saying, hey, let's look at the demand side. And if we go into a recession, I just think the demand comes down. And I think that stabilizes oil from that standpoint. So I don't see the big spike coming in oil. But as I said, I could be totally wrong, but that's my viewpoint. And, if we get above 80, then I have to completely change my tune, because if we get above 80, we're going to 90. There's no doubt about that. But we got to get there first. And I just don't see it.
Yeah, we'll have to find out with that one, but I see what you mean at this moment in time. So next question we'll go to here is Ren from YouTube, who's interested in Berkshire. So that's going to be BRK.B.
The B shares, BRK.B. Well, we're in a 5-wave to the downside with a pretty good wave 4 right at 52%. Likely means that we're going to hit that wave 5 target. So I think 255 happens, maybe down to 250. Just looks like that's just an awfully good pattern. It's a really well structured pattern. DMI is not ugly yet. The CCI is not ugly at all, which means that there's more downside potentially. So yeah, I think we're going to see that wave 5 target on Berkshire.
All right, thanks for that. Next up, Nicholas wrote in his question here: Are Roku to the downside, specifically wondering where the risk is and the target could be.
Oh boy, that break of 60 was nasty. You can see what happened. It really tried hard to hold 60 and gave it a couple weeks, and then it's just broken below, and that's that kind of a march to the downside. When you see a wave 5 at 213%, there's not a whole lot stopping it until it gets to the 261.8% extension. And I've talked about this a few times in the past, but there's not that many times that you see a wave 5, a C wave in a zigzag, any of those type of patterns make it all the way to the 261.8. It happens. It's just not a common thing. But breaking 80 was key. And then it tried to hold again at 60. I just think, yikes. Wow. I guess we would be looking down in round 40, which is probably in the neighborhood of where that 261.8% extension is. So, Nicholas, good to hear from you. By the way, I hope you're doing well. And I think 40 is where we're headed. Now, we are a bit oversold right now, so perhaps to get a little bit of a bounce, maybe not, but it's just like it gave up the ghost there. Decent volume today, but not overwhelming volume. That's the kind of stuff that, I think 40 is the next stop, and then we'll have to see there. It'll try to hold 40 once it gets there.
Very
That's
well.
a good short, Nicholas. I know you might be looking at it from that standpoint. It sounds like it from the question. So I like that. I don't know that I'd wait for that bounce. It's not that oversold. So if you're already short, I would stay with it. If you got short and it bounced up to the 10-day moving average, I'd add to it. So I think see what happens when it gets to 40.
Absolutely. So there's multiple requests for a few different symbols here, and I see we're at a minute till the hour, so I'm going to get as many through to you as I can. First one that has multiple is going to be SoFi.
It's going to try to hold here at 5. It's going to try really hard, but I don't know if it's going to be successful or not. That's your key. if you're looking, it's got a doji today. So if you're looking at it from the long side, if it holds 5 and bounces, the problem is it bumps its head immediately at 6. That's the biggest problem. Is any bounce is short-lived. Is 6 is as far as it's going to go. I think the more likelihood is that we're headed down towards the 4 level. And I know that whatever aggressive institutions, if they have their investment objective is aggressive, they can own $5 stocks. So they're going to try to hold it here because even they'll have to sell if it breaks below 5. And that's why if it doesn't hold here, it goes down quick. It's also why every time it's come down to 5, it's bounced. So there is some institutional ownership here. They're supporting it every time it comes down. Perhaps they try again, but if they do, then it's got all kind of resistance at 6. So before you can go long here, well, I mean, if you wanted to take a stab at it right here and hope for bounce to 6, I think that's the best scenario. But I think there's a good likelihood we're going to see that wave 5 target down there. And if institutions are forced to bail, that might not be the bottom.
Sorry, I'm struggling to unmute there, but yes, yeah, that'll certainly be interesting to see. Next one is going to be Apple.
Figured that was coming. And I still think, I know some people argued with me on YouTube, but I still think that 130 is in the cards here on Apple. And, you know, it was a TradeFinder or Insiders meeting. I think it was the Insiders meeting. Somebody said that they reminded me that I made the comment that it's hard to short Apple because they're so large. I don't think I may have had puts once or twice after real vertical moves, but that was the only time ever that would have puts on Apple. But with this march to the downside here, I don't think this 140 level holds. I could be wrong. I think we're headed to test those lows at 130 on Apple, and then we reevaluate when we get there. We're not that oversold, a tiny bit oversold, but yeah, we held 140 before, and now we're right back there already. I just think that we're going to go test that 130 level, the June lows, and then see what happens there. Hard to imagine, but I think that's where we're going. One more.
One more. All right. Let's go with URA.
Uranium. Well, that's a good one to finish on. So massive support right here at 19 with the doji. Maybe we get a little bit of a bounce there, but if we break 19, we're at 18 in a day. That'll happen really fast. But we're going to try to hold 19 here, and that doji may something's going to happen with it tomorrow. It's either going to bounce, or if we break below that, we're down to 18. But this could be a point where we try to get a little bit of a bounce here. I don't know if it holds though, but 19 is the key here. This is a level to watch. If it breaks below it, watch for 18 very quickly, and then we have to see what happens, because 18 is all kind of support. I mean, way back, beginning of 2021, kind of support. So massive support at 18. So if it can't hold 19, it's got a good chance of holding 18 after that. Then we'll see, but it'll be interesting to see what happens on this one tomorrow with that really clean doji. Does that mean a bounce up, or does that mean we break 19? Lots of indecision in that one right now, but perhaps a bit of a bounce. We'll see. Thanks, everybody. Appreciate it. Sign off the same way every time. Time's the most valuable asset we all have. We very much appreciate when you devote some of your valuable time to us. We in turn try to make it a very educational and informative use of your time, and I hope we've done that tonight. Thanks for viewing on all the different live streaming services. Have a great day. Look forward to talking to you again.